That's Wayne Coffin, Chief Market Analyst, Phoenix Financial Services. You know, Wayne, we talk about everything in the markets, but just a quick thought on Bitcoin. I mean, is it something you follow at all? That's a pretty big move to have it up 12% today, up well over 88,000.
I definitely
you do any of that?
No, because ever since Bitcoin became hot, I've just been afraid of putting clients into an asset that somebody can turn around and say all of a sudden this is now illegal. So that's a reason why I've avoided it.
Well, that's the reason why I asked you, because a pro like yourself, I like to get your inside scoop, because I know a lot of the younger folks always ask me about it. And it's something I've generally stayed away from because it's not something that's normally in my portfolio. So tell us, as a chief market analyst, how are you feeling about the market?
I'm feeling pretty good about it. I think, a lot of people are right now. But, and this is 100%, it's literally a 180 from when I was on the last time, when the market was in the final stage of the collapse. And that was on Friday the 20th. And I said to you at that time that normally I would be calling for a bottom right around then, but there was no real visibility. And I was looking for market signals, technical signals. And actually, we did bottom the Monday right after, okay, one session later. Yeah. And what happened we did get a couple of important signals. And your viewers should know about this stuff. We had a gap up on the Tuesday following that Monday bottom. We had a gap up on the S&P 500, gaps off of important lows, and a multi-year low is obviously important, are very significant. And then by the end of the week, on the weekly charts, we had what's called a bullish engulfing candle. It's on Japanese candlesticks. And that's very significant on a weekly chart. And you can go back and look and see in March of 2009, we had these same signals. So those were signals for people to start putting money into the market. It's not an all-in if you had a lot of cash, but they were definitely signals. And we've had more signals since then. And we've had tremendous market breadth. The valuation story is very interesting. And what I've been talking about in my meetings to our brokers, I've been saying stocks were very attractive. And we never got over bullish, okay? So sentiment remained very bearish, which allowed stocks to continue moving up. And that's unusual because when you have a strong rally, typically options traders and sentiment follows the rally. It gets more bullish as the rally goes higher. We did not see it here. We're only starting to see it at this point. So I remain positive on the market. And relative to the valuation thing, I know we can't go on this year's earnings, which are now about 133 or something. When this started, I told our guys, knock out a quarter's worth of earnings and use $120 for the year. You'd still have a bottom, 2,400, 2,500 on a 20 or so PE. But, one interesting way to look at it is that with the 10-year note yield at 0.6%, the question is, how much money are you willing to invest in order to earn $1? So at 0.6%.
Well, let's get to it. I want to hear about the money that you want to invest. You're saying people are still, we were not overbought. We've had a great run since March 23rd, that the breadth is looking good, that stocks are very attractive. I got all your points there, Wayne. So you like some semiconductor stocks, some hot semis. You have 3 of them that you sent our way. Why don't we start off? ASML and Lam Research are 2 of the 3. Tell me a little bit about those.
Okay,
why you like them?
First of all, short term, the market is getting overbought, so people do need to be careful with entry points if they're short term oriented. Longer term, semiconductors lead the entire technology revolution, and we're in the golden age of technology. And these 3 companies are the most well positioned, in my opinion. ASML is a monopoly. I've recommended it on your show. It's a monopoly, and they monopolize the lithography field, and the entire movement of chips getting smaller does not happen without this company and without lithography in particular, but they are the monopoly in lithography. And just to give you some scale on it, 20 years ago, the average size, chip size, was 180 nanometers. Now they're moving into 7 nanometer chips. So ASML, over the next few years, over the next decade, just has a tremendous path ahead of it. Lam Research is probably the dominant company relative to memory, in particular 3D flash memory or NAND memory. And they've got tremendous operating leverage. And when their markets are hot, they put up tremendous numbers. And last is TAIWAN Semiconductor. And they're the world's largest foundry, independent foundry. They contract out. Companies like NVIDIA or AMD contract with Taiwan Semi in order to manufacture their chips. They are the ones leading right now in 7 nanometer, 5 nanometer manufacturing, and moving to 3 nanometer. And they actually buy about 1/3 of the equipment that ASML is producing. So it's just a tremendous troika. And these companies, I think, for longer-term investors, these are amazing companies that dominate their industry, and I think they're must-own for people who are technology investors.
Yeah, and those are good long-term plays because obviously over the next decade, this is what it's about. Is there quickly just a final thought in an area that you would stay away from right now?
You know, other than for traders, I'm not really bullish on carbon assets, okay? Oil stocks. They've been so beaten down that there's definitely been a trade. In fact, you were speaking to that reporter about oil and the price of oil and how it's gotten, you know, just destroyed, especially last week. But interestingly, the XLE, if you watched that at the same time, did not go down when oil was going negative. In fact, it held its 20-day moving average and actually traded up on that day over where it opened. So that was a sign that there was a positive divergence for the stocks versus the commodity itself. So there's trading opportunities there. But relative to energy, I much prefer the stocks that are in the solar area, stocks like Solar Edge and Enphase, which I've recommended on your air before. So that's the one area I really don't love.
Interesting. All right, Wayne Kaufman, nice to see you. Thank you. Chief Market Analyst, Phoenix Financial Services. Great to see you as well.